For Stockmonster.com, I'm Wesley Harr with your market mixto. Today, market's breaking down. SPX, the S&P 500 index, is trading down to 1222. I'm looking at significant levels overhead at 1224 and 1229 to 31. Below us, I'm seeing 1214 and 1208 as support we can work off of. The NDX traded all the way down to 2291.70. Significant. Why? Because October 26th, I saw it trade down to that same metric except 0.78. This is a significant level here. If it doesn't hold this level, expect things to break down further. Some things I like in the marketplace right now, I still, despite this market pressure and market weakness, I like coal. Coal names that stand out to me right now is ACI, Arch Coal, Alpha Natural Resources, Peabody, BTU. They all look interesting. Recently, there was an article in Business Week talking about how China, with their latest catastrophes in their coal mines over there, unfortunate catastrophes in their coal mines over there, is faced with the dilemma where they need to import more coal in the near future. That being said, I'm looking to play these names on the potential increase in China imports of the material. With me today is Evan McDaniel with Stockmonster.com. He's got a couple ideas on the rails. I'd like to kick it over here to him, and let's see what he has to say about it.
If you're looking for somewhere in this market to be, and you don't want to be run over by the rails of this market, look at KSU, maybe take a look at CSX. They're going to be strong despite the market volatility. They're always going to be rail car loadings, and we're always going to be pushing things out on these rails. So if you're looking for a spot to be where there is not going to be added volatility into your trade, I'd like to take a look at these rails, and they're not going anywhere. They're always going to be in play. So with that, what's your thoughts on the VIX?
The VIX has been spiking and spiking hard. It's been trading in a range recently between to paint a rough picture, between the 30 and 40 area. Right now, we're sitting at somewhere between 36 and 37. I don't see volatility subsiding in any major fashion anytime soon. 30 has been a really hard level of resistance for the thing to break through. It broke through it just recently, only for a session or two, and it wasn't able to hold the levels. I expect it to continue to stay high and creep back up in the near future. Using strategies that take advantage of this high volatility is definitely wise. You want to take this into consideration with anything that you're trading.
I agree. So,
something else you want that I find notable when it comes to your rails is the number that came out today on OSK. OSK's earnings number was down. This, I think, leads me to look in a more negative light towards names like CMI and PCAR, PACCAR and Cummins. They both make the engines and the components that go into these industrial style vehicles, which also end up being largely transported via the rails. So it's something to take everything with a grain of salt. It's something to take into consideration when you're looking at the rails. But you got to remember that the rails, their number one source of income is coal. So if you're looking at coal exports out of the United States being greater, you're going to want to look at the rails as well, like Evan's mentioning, to take advantage of that. Anything else to add to that?
Nope.
Well, for Stockmonster.com, I'm Wesley Harr. Remember, follow me at Wesley_Harr on Twitter and trade with me daily at Stockmonster.com. You can trade with Evan daily there as well. And remember, make a profit, take a profit. Or is it take a profit, make a profit?